Let us take an example to understand this concept. Now, the example I am writing here, capital brought in by Ram. Ram is the owner. I am specifying it here, rupees 5 lakh. Now students, Ram is the owner of a business who has brought in a capital of rupees 5 lakh in this particular business. So how will you illustrate this using accounting equation? Let us actually try and analyze this transaction and find out two different items. Now remember, whatever are the accounts or whatever is the effect must be actually seen or valued from the point of view of business. Now the point of view is of business. From the point of view of business, we are getting cash. Cash is an asset, so I am writing it directly under the head of assets. Business has got assets worth rupees 5 lakh now, and this 5 lakh has been brought in by the owner. So owner's money is represented by capital. I am directly writing it under capital, 5 lakh, and you can see that they are always equal as there is no component of outside liabilities. So now students, it makes it very clear that in any business, this fundamental relationship holds true at any given moment of time. That is, the assets at that moment of time is the sum total of capital and liabilities at that particular time.